Massive job cuts, a profit nosedive. Yahoo CEO Marissa Mayer has announced her battle plan to turn the company around and keep her job. Yahoo will lay off 15% of its workforce and close 5 global offices. Its aim to save $400 million this year, and the pressure is on. It reported a fourth quarter loss of $4.4 billion. That compares to a $166 million profit the same quarter a year earlier. Yahoo stock is down around 1.5% in pre-market trade. Yahoo investors haven't been shy in voicing their frustration over CEO Marissa Mayer. Among them is Eric Jackson, managing director of hedge fund SpringOwl Asset Management. He has been leading the call for Marissa Mayer to go, and he joins me now. Eric, thanks so much for coming in. You heard what she had to say on the call, cutting staff. She's going to simplify the company. A step in the right direction, or too little too late?
Well, I think it was a very confusing presentation that she made yesterday to investors. At the same time, she laid out how she was going to do a large job cut and kind of drive greater efficiencies in their business. She also explained how they were going to invest in a massive new project to create a new form of mobile search, seemingly in the face of a monopolistic power like Google. And then they said that they were going to continue with their path of spinning off their core business from the rest of Yahoo. And at the same time, they also announced that they're going to be open for potential bidders or acquirers or investors to come and make offers on Yahoo. So there was a lot of skepticism from the analysts about how they were going to be able to do all these things well at the same time.
Marissa Mayer certainly knows that she's under pressure. On the call, she was particularly vocal about responding to claims of overspending, calling them blatant falsehoods. This was the $450 million on free food, $7 million on a holiday party. You have been one of the people publicly talking about this. She says they're lies. How do you respond to that?
Well, we stand by our 99-page presentation that we released in December, and including all of the various items that we mentioned. The free food, the $450 million estimate was over a 4-year period. We called up their caterer, their primary caterer in Palo Alto, California. We asked for their prices to provide catering for different things like lunches and dinners. We multiplied it by the number of Yahoo employees, and that's the number that we presented in the presentation. The holiday party price that we quoted came from an internal source or a confidential source, and who we feel confident in. So we stand by the report. She claimed her counter is that they spent much less. Even if you accept those lesser numbers that she quoted, they're still very high considering the performance of this company over these last few years.
And I know this isn't the only issue. Your report is 99 pages. Others who have spoken out feel like it's not just the spending, it's the strategy of what Yahoo is, the core question of what can make this company successful. Is Marissa Mayer the right person to lead Yahoo?
Well, we have strong doubts, and that's really the thrust of our presentation. I mean, really, yesterday she was presenting a turnaround plan 3.5 years into her turnaround plan. And so we think, obviously things have not gone right, and that has to lie at the feet of management. However, I do think that she can still be a hero for shareholders in the sense that I think she needs to provide more clarity around what this exploration of strategic alternatives could be. If she was to sell the core business successfully, or if she was to take an outside investment from a key potential partner into Yahoo and bring them onto the board and ensure that shareholders were going to have a turnaround with credible partners, I think they would warm to that. So there is still hope. I don't think yesterday was sort of the final chapter in this discussion. Hopefully there's going to be continued evolution of steps that are going to finally unlock value for shareholders.
I think supporters of Marissa Mayer would probably say that the fault doesn't lie with her. This is simply a company that's seen its best day, and it doesn't matter who's at the helm. Even if Yahoo's on sale, who wants to buy Yahoo, or who wants to even buy parts of Yahoo?
Well, I think a lot of people would want to own a website that's still the top 5 trafficked website in the world. You know, I've been following this company and been a shareholder in this company off and on for 10 years. And 10 years ago, people were saying that Yahoo was a dinosaur. And yet here we are today, even with all the problems, and they are still probably next year going to do $3.5 billion of revenue and be profitable. Now, there's no question that she came into a situation over 3.5 years ago that was very difficult, would have been difficult for any CEO. But I don't think you can say she should get a pass based on what the track record. You mean, you have to look at what did she actively do over these 3.5 years? What was within her control versus what was outside of her control? And I think, you know, yesterday we heard a lot of facts that suggested many of her moves, if not most of her moves, have not worked out.